What are estate taxes and can you avoid them? Hi, I'm Doug Ray, president and founder of the Wealth Guardians and the Ray Financial Group.
And I'm Brice Payne, and you've entered The Vault, the Wealth Guardians video series on all things pertaining to retirement planning. In this episode, we're going to talk about estate taxes, otherwise known as the death tax, and what options are out there for you to have perhaps avoid this or find some ways around it. Don't forget to hit these like and subscribe buttons down below the screen there if you want to catch future episodes of The Vault with Doug, Garrett, and myself. Okay, Doug, let's get to this. Estate taxes doesn't impact everybody, but for some of us it does.
It does impact some people. The estate tax is a tax that's levied on your estate after your passing. Right now, the current exemption is $13.6 million per person. So essentially, a married couple could shelter a little over $27 million. And if you look at this chart, the tax rates start at 18%, and they escalate rather rapidly. So by the time your estate is $1 million over the exemption level, you're paying 40% on that excess estate.
Now, who is this going to impact?
It's going to impact businessmen, small business owners, farmers, people that have rental properties,
Okay.
or large brokerage accounts.
Business owners and people who have a lot amount of real estate.
Exactly.
Okay. So there's some ways to avoid this. I mean, we've got the exemption up to $13 million per person, but beyond that, there might be some ways to avoid it.
Well, let me also add this. Come January 1st of 2026, if it's not changed, the estate tax exemption is due to sunset and revert back to the pre-Trump tax code, which was $5 million at the time, and adjusted for inflation, probably will hit around $7 million.
Okay.
So it's going to affect a lot more people.
Sure.
About a 50% cut
Okay.
in the estate tax exemption. And by the way, your income tax rate's going to sunset too, and you're going to have a higher marginal tax rate.
Okay. So then what are some of these strategies for avoiding these estate taxes if we're in that position where it would hit us anyway?
So you can use annual gifting.
Okay.
Right now, you can gift $18,000 roughly a year to any person.
Tax-free.
Tax-free without having to pay the gift tax.
So we can lower our estate value by doing that year after year. That sounds like that requires some planning. You can't do a massive amount in 1 year.
Right.
Okay.
Past that, what you need to do is go hire yourself a really good estate planning attorney.
Sounds like it.
And then he might suggest drafting up a charitable trust type situation so you can leave some of the assets in your estate to a charity.
Okay.
Or charities of your choice. You can set up irrevocable trust where you're giving some of your estate to a trust that's irrevocable, meaning you can't go back in and change it and have access to that money. So essentially, you're getting those assets out of your estate. But again, an estate planning attorney would have to draw these up for you. Another technique would be to have a trust where you put your assets of your estate in that trust. If you're a married couple, I said earlier, you could shelter up to $27 million per couple. That means you'd have to have two trusts, a his and a hers, sometimes called an AB trust, and then you would fund those trusts with assets in your estate, just simply meaning taking your name off those assets and putting the trust name on there. And if you have estates in excess of the estate tax exemption, then what you might do is buy a second to die life insurance policy, which pays the death claim on the last spouse who passes. You would buy enough insurance to cover the estate tax after the last spouse passes.
Interesting.
That policy would be put into an irrevocable life insurance trust, so it gets it out of your estate. But the money is there so your heirs can pay the tax.
Okay.
Inherit your estate.
So it's not really avoiding the tax, it's just finding a way of paying for it that you might otherwise have overlooked.
Exactly. So that would basically, if it was a small business that was passed to the heirs, They would inherit the entire business. They wouldn't have to sell it, portion of it in a fire sale. Same is true for real estate or anything else.
Okay, sounds good. So basically, if somebody says, hey, I've listened to Doug and Brice talk about estate taxes, I think I might fall into this where this is going to be a problem for me. Number one thing you could do is go to an estate planning attorney and sit down with them and say, I think this is my problem. Do you confirm that's my problem? And if so, what can we do as far as setting up trusts or anything else to avoid that problem?
Exactly.
Okay. So if this sounds like this is affecting you, that would be our recommendation to you. Go see a estate planning attorney and make sure that they are aware of your situation and they can help you figure out what to do to avoid Uncle Sam if that is indeed your goal as much as possible.
Yeah, absolutely. And if you don't know of an estate planning attorney, we work and refer to a very good one. So come and see us.
Very good. All right. So that's going to wrap it up for this episode of The Vault. Again, I'll bring your attention to these like and subscribe buttons down below the screen there. Go ahead and click on those if you want to catch more advice and tidbits of wisdom from the Wealth Guardians in your future encounters with us. There they are right down there. And other than that, I'm Brice Payne.
I'm Doug Ray.
And this has been The Vault.